Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
Good morning, everyone. Hope everyone is well. So before we kick into the day, just a quick reminder that Property Summit is back this year again on the sunny Gold Coast in June. What have we got? 13th and 15th of June this year. So make sure that you get yourself down there and check it out. Last year's event was super exciting. Lots of people, a lot of memories. So who's it for? It's for anyone who loves property. There'll be special guests there giving us an update. There'll be the 6-star team there as well. And there should be a link in the chat just to register. So have a look at it, go into it. If you can, mark those dates in your calendar, and hopefully we will see you there. So I think we've got a video from last year just to give you a bit of a glimpse as to what to expect, but I'm sure this year will be much, much better and bigger. So let's go to the video.
All right, this is going to be fun. Who has played the property game before? Who has been in the game? Who's never played the property game before? Oh, you're in for a treat. Who likes Monopoly? Did anyone like Monopoly when they were a kid? Well, this is Monopoly in real life in this room. Every hour or so, you guys are going to be up and you're going to be running around the room like maniacs trying to play the property game and win the property game.
Today, I wanted to share the lessons, the mistakes, and the wins.
I want everybody to put up their hands who knows their interest rates on all their loans right now.
If you haven't seen me around before, like 13 years in the industry, in property management specifically.
Who likes paying tax? If you need help finding somewhere to donate, I'm sure I can find somewhere else where it can go.
No, we've got an expression in that, let's go and make new mistakes in the world. Who wants to make new mistakes?
These are just strategic moves that can make such a big difference.
So obviously buy well, never sell. Definitely the majority of what everyone's looking to do is collect some A-grade assets, B-grade assets, whatever it might be.
I loved the idea of being a property investor and developing that identity.
Collectively, they have way more years experience in everything that you think you're trying to solve. Because they do it every single day.
Yeah, great. Like I said, awesome event last year, and I'm sure it's going to be bigger and better this year. So make sure you get down there. I'm 99% certain you're going to get value out of it. And it's all about property, and there'll be other extra bits in there as well. So hope to see you all there. Well, let's get into the day. Good morning, Jeff. Yes, we'll touch on that shortly. So, yeah, absolutely. A lot has happened in the last sort of 7 days. So, last week, we caught up, and I mentioned that Trump came out with his reciprocal tariffs on the entire world. And I guess this morning we wake up again to another plethora of interesting information that came out from there. So we'll touch on that in a tick. So let's kind of recap what has happened and where we're going to today, and I guess over the next couple of days. So good morning, Chris. So what happened? So last week on Thursday, I had a completely different topic, and all of a sudden, I woke up to news that Trump decided to apply tariffs across the entire world. What he's called a reciprocal tariff, which just means that if you're going to put tariffs on us, well, we will then put tariffs back on you. Well, what happened since then? I think everyone would have been watching the markets and seeing that it's just been going one way, and that way has just been in the red, down south, not great at all. So the markets are off about 15% over the last week. And, rightly so, because obviously it's a big impact on what is going on. A lot of people and a lot of businesses are not, they're not sure what this will mean for them, and they're all trying to work that out, put into their numbers. Obviously, with the supply chain as well, that's gonna have a lot of impact on that as well. So, and we've had a very turbulent time. The markets are down, and all of a sudden today, this morning, again, Trump came out and said, "Well, let's put a bit of a pause on this and have a 90-day negotiation period with the countries that are wanting to review their tariffs." So I guess this then creates a bit of an opportunity, because if you wake up and looked at the markets like I typically do every morning, you'll see that the US has rallied nearly 10%, right? So just on the back of something that may or may not provide a resolution. So, and when I say that, it means that essentially, what does the negotiation mean? It doesn't necessarily mean that they will come out and have a resolution, right? Because they could go back, have a negotiation, say this is my tariff, this is your tariff. They don't agree on it, so they go back to what we saw last week, and tariff stays on. So, but for the markets, this is a great opportunity for short-term sort of buying and selling. Again, this is not advice. I wouldn't recommend it. It's highly risky. You'll most likely lose money than you make money. So it's definitely an opportunity for some, but also if you don't know how to use it, then you wouldn't want to get into this. And our mandate from our side is always to invest long term, right? So the short term periods and short term fluctuations, they are there. Yes, that's great. So, but if we've got strategies to have an investment portfolio over the years, then we can capture those dips and also take advantage of them as well. Again, speak to a professional before you make or do any investments, because it could be very, very risky for you. Okay, so we've got a couple of more people jumping on. Hey, Tim, how are you? Yes, rate cuts on perhaps. Yes, maybe we'll see them, but definitely we've got a lot of volatility. I think a lot of people are trying to process what impact the tariffs will have on them. So yeah, well, we'll see. We'll see where it goes. But from what I've read so far, the consensus is that we might be looking at slowdown in operations just across the board, which will then create a bit of pressure from the RBA specifically to potentially cut rates, but you never know. They might sit on it and see where things go. So I guess one thing that I looked at just before jumping on to this podcast is to kind of review and see what happened over the last 25 years in terms of these really sharp declines in the market. And, obviously we had the dot-com bubble in early 2000, and we had the global financial crisis, COVID, all the big ones, right? And just to sort of give you an overview how long it has taken to recover from those sort of sharp dips, right? So with the dot-com bubble, it took about 7 years to recover from when it hit low back to the 2000 levels. Then with the GFC, that took about 4 to 5 years, right? So, and then with COVID, it took only 5 months. So I think the message here is that with technology and how quickly the information flows, right? The ups and downs in the market and the duration of those periods seem to be shortening every single time. So again, if you think about it, tariffs came into play a week ago. The markets are off about 15%. And then obviously some are more, some are less. But, let's just say it's off 15%. And then today we had a rally of 10% in the US. So this should flow through into the Aussie market as well. But let's just say, we get about 7%. So, those losses of what 15% will be halved essentially. So, and again, to try to capture that in a short period of time, I would argue that the analysts that are looking at it right now, they would not be able to even comprehend what they were looking at last week with the information that they had to today. So it's a continuous update of numbers, what is happening. So again, like I said, you have to be very, very switched on when these things happen. And if you do try to take advantage of it, then you do need to seek professional advice before you do so. Otherwise, it's really, really just gambling. So let's have a look. I think we've got a couple of questions here. So Jeff, I think you mentioned something about shares, crypto changing again, just like that, tariffs. Yes, that's right. So very volatile period at the moment, Jeff. So if you're in the market, then that's could be an opportunity. But if it's if you are one of the investors that doesn't like seeing negative results, then you might be sitting on the fence and actually wanting to sell. So now another message from Jeff. Big talk now internationally of interest rate drops. Yay, savings increase, affordability, more people will return to market. Yeah, look, potentially, yeah. When if we consider what is happening now, you look at gold, for example. So gold has been on a huge rally, right? So gold is typically a hedge against risk, right? So the last 12 months, it's up about 30%. Right. So if you think about it, what has happened over the last 12 months, obviously the US elections, high interest rates, and I guess now tariffs. So all of these things, gold will be thriving in. But if you look back sort of the previous 10 years, it basically did nothing. So, that's why I mentioned this previously, but you want to have diversification in your portfolio to give you that allocation to different asset classes, because they do all perform differently depending on where we are in the market cycle. So similar, if you're a property investor, you don't want to have all of your properties in one suburb. You potentially want to have them across different suburbs and even maybe potentially across different states. So depending on what your portfolio looks like. So yeah, look, if the tariffs create major slowdowns in the economy, then it may potentially result in rate cuts. So a few experts have come out and sort of mentioned that there might be another 2 or 3 cuts this year. Again, we don't know what the future holds. So the tariffs could completely drop off after 90 days. So it's everything up in the air at the moment, and we will see what that looks like in the future. So what's my prediction for real estate this year, Tim? To be honest, I'm not a real estate agent, and I don't really see assets in the short term. So for me, it's all about long term, right? So again, if I look at assets like real estate, historically they've always gone up. The other guys in the podcast have mentioned things around supply and demand, obviously the cost of building. So if you take all of those factors into play, then the real estate is likely to perform well long term. So in the short term, because it's not like equities where they get repriced every day. Real estate is a little bit different like that, because it's typically 10, 15, 20-year periods in which they get valued, which is typically when it's either sold or bought, right? So I'm not the best person to answer that question, Tim. Hey Rod, how are you? So I'd be interested in your thoughts on crypto as an investment. Look, we don't advise on crypto personally. However, it is another asset class that is gaining a lot of traction, and you would have seen the volatility within that sector. So it was sitting over $100 US a couple of months ago, and now it's sort of, I think last time I saw it, it was about 75,000 US per Bitcoin. So huge fluctuations. There's a lot of different sort of cryptos out there, so it's a big space. If you've got the tolerance to volatility and you can sleep at night a bit, with knowing that, then something that you could consider for your portfolio. Absolutely. However, it is a highly volatile investment. We're trying to work out how does it really work. Is it more of a hedge against something, or is it completely different asset class in the way that it operates? And so far, there's been some signs of it being a bit of a hedge, but then on other times when it should be a hedge. And by the way, when I say hedge, it's sort of like if the markets are down, well, the crypto should be up, and vice versa. If the markets are up, crypto might be down. So something along those lines, right? Not exactly, but to give you an idea. So again, the best course of action that we apply to our clients is diversification. So have a little bit of property, equities. If you are high risk, then you could dabble into crypto as well. Have some defensive assets as well around fixed interest, bonds, things of that nature. So that way, when the markets are volatile like they are right now, then you have you have different returns, and your portfolio isn't suffering as much. But again, all the time, our outlook is 10 years plus for any of the investments. So keep that in mind. And I guess just one last thing on which I want to finish off today. So the other thing that came out of the US is that with the tariffs, China came back and increased their tariffs on the US. I think what are the numbers? 84% on the US imports into China, and then quickly straight after that, Trump came out and said that okay, no problems. Well, we will increase your tariffs again, and that totals about 125% on China goods flowing into the US. So the message there, like I said last Thursday, 2018 was a very similar sort of episode where we saw China and US going head to head with their tariffs. Ultimately, that took about 6 months before they hit a pause button. Don't know whether that will happen this time around, or whether they will just continue to lift tariffs to a point where it's no longer economically viable for them to even deal with each other. But it's difficult because China provides so many goods to the world, and especially the US. So there has to be some sort of resolution, but at the moment it doesn't look likely. And the other big one that we don't have too much info on, but this was also sort of squeezed into a couple of announcements, is that Trump is now looking at tariffs on pharmaceutical goods. So not a lot of detail around that at the moment, but let's see where that goes. But something to be aware of and have on your radar. So that may create some volatility within those sectors. So yeah, again, quick summary. These things are changing every single day. Like I said, the tariff situation is ever evolving, and every day there's something new. So stay alert, review your investments, look at opportunities, speak to your professionals, and make sure that you make the right decisions. So this is an interesting time for everyone. And don't panic. I guess that's the message. Don't panic. If you've got the right strategy and you stick into it, and it's over a decent amount of time, then you should be all right over that period. So all right. So guys, one more time, don't forget the property summit is on this year in the Gold Coast, 13th to 15th of June. There's a link in the chat, so jump on that, reserve a seat, and I hope we will see you there. So from me, guys, to you, have a good day and enjoy your coffee. See you later.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-Star team here at positivementor.com.au.